Okay, it's 10 o'clock. Looks like we have about 62 participants, so I think we can go ahead and launch today's meeting. To go ahead and get started, my name is Keith Blanchard, and I am the field manager for Index Fresh, and I want to welcome you to today's 2021 California marketing meeting. On our panel today, we've done this Zoom meeting as a webinar version to kind of minimize any accidental background noise. So the questions and answers can be directed through the chat box, which should be accessed at the bottom of your screen. But to introduce our panelists today, starting off our presentation will be Giovanni Cavaletto. He's a vice president of sourcing. Today, Giovanni will go through our agenda. If you can bring up that next slide, Sophia. Starting off with our introduction to Index Fresh. Giovanni will go through supply in the U.S. market, an update on our country of origin with acreage and volumes out of each major producing country. An Index Fresh marketing update from Todd Elder, who's our vice president of sales and marketing. He'll go through positioning California as a premium brand, talk about our organic program and customer base, and on our export efforts. And then a new face for you today will be Susie Rea, our sales department, and Susie will be talking about our GEM programs. And then we'll go back to Giovanni. We'll wrap up with harvest recommendations, index philosophy, and our grower programs. So thank you all for attending. And if you can, there's the chat function, and I'll be monitoring. You can also raise your hand if you have any questions during the presentation. You can use that option to click on. So with that, Giovanni, you can unmute and take it away from there.
Okay, so good morning, everybody, and welcome to this seminar. It's a little different format than we have historically done in the past. Normally, what we like to do is about this time of year is we put together this presentation for all of our growers, and then we do a rolling presentation. So normally we'll do it once down in Fallbrook. We will do it a second time in Ventura County, and then a little bit later into the season, usually in March or so, we do a third presentation up in San Luis Obispo County. So just like we've been doing with the smaller format monthly marketing updates that we've been doing virtually instead of personally with the COVID restrictions, we decided to do this one virtually as well. So I'd like to thank everybody for your attendance. So a little bit of more about us, just for those of you that might be new to the industry or new to Index Fresh. We were founded in 1914, so we've been around for a while. We're owned by a broad base of California growers, and our board of directors is made up entirely of California growers. And of course, they want Index to be a viable and sustainable company. But at the same time, the reason that Index exists, and it's in our mission, vision, and values that you can find on our app, is to maximize grower returns, and that really has not changed, and that continues to really be what drives us as a company internally. We've been handling avocados since the 1940s as they began to displace. Originally, we were founded as a citrus organization. Added avocados in the 1940s as they began to displace citrus in Southern California. And today that's all that we handle. We're about 7% share of market in total U.S. Sales of avocados, and last year we were right at about 11% share within California. So we over-index, if you will, to California fruit in terms of share of market. We can go to the next slide, Sophia. So this is just a small calendar of the avocados that we handle. So we do handle, in addition to California avocados, we also handle Mexico, which is about 70% of the fruit sold in the United States. Peru will come in the summertime with significant volumes on a per weekly basis. Mexico is year round with an off season during their transition from old crop to new crop, which happens in June, July, August. Colombia is kind of the new kid on the block. They are very small volumes, but they have two different seasons, which is kind of interesting. We believe that eventually they're going to be year round. And then Chile, which used to be a powerhouse of avocados in the United States, primarily during California's off season, has really not shipped hardly any fruit up here for the last season or two, and we'll get into some of those reasons a little bit later in this presentation. So here we have a graph showing indexes growth over the last 10 years by country of origin. I think this is relatively self-explanatory. This graph shows how a couple of things to see on this graph are, if you zero in on the California numbers, you can see the alternate bearing where it kind of goes. You can see the large years and the small years. You can see how Mexico has grown in importance and share of market over this decade. And we can also see where Chile has shrunk kind of over a similar time period. We can go on to the next slide. So what I wanted to do on this is go through and kind of country by country describe what this season is looking like and what the competition and playing field will look like according to our projections. So let's get started. This is the overall supply outlet. This graph is a little bit different than the index only slide. You can see the California alternate bearing. You can see the growth and the importance of Mexico, the reduction in the participation of Peru. But the long story short is, after about 3 or 4 years of not very much growth at all this year, we are projecting greater supplies. So again, Mexico, they are their season is from July through June. And so we're just past the halfway point on them. And from July until last week, they had shipped about 8.5% more fruit than they had last year. And that's really what's driving this growth that we're forecasting for 2021. California is going into an off season, and we'll get a little bit more into what South America is planning to ship in the next couple of slides. Okay, so California, our current acreage is holding relatively steady at about 51,000 acres. The estimated 2021 volume is now down to 286 million pounds. It was we were originally a little bit higher than that. It was originally projecting only about a 15% decrease, which by alternate bearing standards is not too bad, considering the large crop that we came off last year. But then we had some really devastating winds, primarily in Ventura County, but to a lesser extent in other parts of the state. I know Palma Valley down in San Diego County, and parts of the Cambria area up in San Luis Obispo County also had very, very strong winds. And that brought our 2021 estimate. It was originally over 300 million pounds. We brought that down to 286 million after the winds. We believe that the season, for all intents and purposes, is not going to start until March, and then it should run into September with critical mass. We know that there's been some harvesting, some early harvesting for whatever reason. Could be cultural, could be otherwise, but with today's market, we really don't see any reason to get started early. You want to avoid orphan fruit in the market. So if you're the first one in without critical mass to get into your nationwide top tier accounts, you don't want to start with fits and spurts. You want to be able to start with critical mass that you can then convert your base customers from Mexico into California and then sustain that supply throughout the season. The other reason for not starting early is the market conditions just are really, really not that attractive this year. This is primarily driven by a decrease in demand because of COVID. There was a story on NPR that I heard last week that that there were 600,000 restaurants in the United States, of which 100,000 have closed, and they were projecting that as many as another 100,000 restaurants could close. In addition to that, the high unemployment that we have right now, the gap since the last stimulus has gone out, has really had a impact on demand in the United States. So we're moving today's prices, in my mind, it's a blend of an increase in supply and a decrease in demand. But I would put a greater part of today's prices on the decrease in demand. If we look back at pre-COVID, back in February last year, after the Super Bowl, we were able to move over 50 million pounds per week in a $50 market. So the demand was obviously there. Today, we're moving similar volumes, about 7 or 8% more, as I said, but in a $22 or $23 market. So less than half the price today versus what it was a year ago, despite the fact that there's only 7 or 8% more fruit in the market. The peak, so that's another reason. So today at $23, that doesn't necessarily get a lot of growers excited about. That's not going to pay the water bill. And so we have reason to believe that as we get further into the season, the profile of growers out of Mexico changes. As the weather improves, demand improves historically in the United States. And hopefully, as these vaccines get into the arms of of people. I know my folks got their first round yesterday. Hopefully, over the next weeks and months, the economy will start to come back, and maybe we can start going back to normal, and we can see that demand curve strengthen. With the off crop, we are projecting that the harvest window will be over fewer weeks than last year. Last year was the first year in probably 10 that we actually had some carry out past our October 31st end of our fiscal year. And there was California fruit that extended into November or throughout the month of November for some handlers. That was the first time that it has taken place in at least 10 years to my memory. And we don't see any reason for that happening this year with a smaller California crop. So we can move on to the next slide. Can we move on to the, my slide is frozen on California. Oh, Mexico, here we go. Thank you, Sophia. Mexico, they currently for the United States have 345,000 acres certified. That's about 5% more than last year. And they add about 3, 4, or 5% more acreage every single year. That's a slower growth rate than it was back in the early 2000s when they were adding 10 to 15% more acreage per year. Of course, as we all know, as we get to a higher number, almost 350,000 acres certified, it's harder to get to sustain double-digit increases. The 2021 crop that they have budgeted at avocados from Mexico to ship to the United States is 2.4 billion pounds, which is a 13% increase over last year. Season to date, since July, they have shipped about 8% more than the previous year, despite the low prices. Despite the low prices in the United States, they've still shipped 8% more fruit to the United States. So it's not as much year to date as they had projected over the volumes from last year, but it is significant. They'll continue with sustained volumes in the 50 to 60 million pound week into the spring. The summer transition, during the summer transition after Cinco de Mayo, that will decrease to the 30 million pound range. It's still too early to know, hey, how much fruit is left out of Mexico. Right now, that is the question that everybody is asking. California growers are asking that. Mexican growers are asking that. South American growers are asking that. On February 12th, we're anticipating the next crop update for this season's harvest coming out of from OPM. So as soon as that is available, we'll get that into the field teams, get that information into the field team's hands, and share that with the grower base. It's still too early, and that crop estimate is going to get us to the end of June. Then in July is when they start their new crop, which always starts with Flor Loca. They will come out with a Flor Loca crop estimate, but not until late March. So it's still too early to know. So by the end of this month, we should have a better handle on how much old crop is left in Mexico. And it won't be until we get that new, the Flor Loca crop estimate later in March or April that we can know how much fruit Mexico plans to ship in the second half of our season from July on. Jalisco is still not allowed into the United States, so it's still 100% Michoacan only that is coming up here. One thing that's been interesting is Mexico this year has significantly increased their volumes to Europe. The European market has been healthier than the United States over the last few months, to the tune of maybe a 30 to 40% premium versus the US market on pricing. But there's certain risks involved. In Mexico, the Mexican fruit doesn't necessarily travel very well. So they've historically shied away from the European market, but this year they've shipped more than they have in the past. If they're shipping 1,200 loads a week to the United States, they have been peaking in about the 200 loads per week to Europe range. And that's really a factor of the smaller crop in Chile, who's generally the primary European supplier this time of year.
Giovanni,
Yeah.
Giovanni, is Mexico sold at a discount to other offerings in Europe?
A slight discount. So, and that's because it's kind of that quality issue that they have. There are no fast boats from Mexico to Europe, so it takes almost 3 weeks to get there. So they do have a little bit of they are sold at a discount. So I think Chile, which has been there for years and kind of developed the winter market, and to a lesser extent Spain, because it's a local fresh product, kind of are at the top of the market. And then Mexico sold at maybe a 5 to 10% discount versus Chile or Spain. So we can go on to
Hey, Giovanni.
Yes.
Giovanni, a quick question came in about what is the prospects of Jalisco being permitted into the United States in the future?
That's a question for USDA. They have to, the Jalisco, or actually Mexico, has proposed a work plan to USDA. It was all set to be, it was all set to go through 4 years ago. Actually, it was so close to final approval that there were trucks on the road from Jalisco to Texas to be sold in the United States. And then at the 11th hour, and that was on the day before the last president was to be inaugurated. It was the last day of the Obama administration. And then it came through that deal did not go through because of the last administration's policies with Mexico. There was not much interest in expanding inbound trade with Mexico. So it's kind of been in limbo for 4 years. Right now, I don't know how much of a priority it is for the new USDA regime to broaden that or not. I assume right now the feds are primarily concerned with the rollout of the vaccine more than any ancillary stuff. So I do not know. There's no imminent news out of Mexico that is going to happen immediately or this season. And as soon as any news does come out, we'll make sure to share that with everybody. The next largest supplier in the U.S. after California and Mexico is, of course, Peru. They've got about 74,000 acres in the ground, mostly in large-scale plantings, like you see in this photo. This is a single avocado farm in Peru. Last year, they reduced their shipments to the United States to about 70 million pounds, which was a 6% drop. That was primarily because of the decrease in pricing because of COVID, and the fact that the European market recovered before the U.S. market recovered. So kind of they were shipping relatively heavy in June, and then by August, they started to drop off pretty precipitously as Mexico got into its new crop, and the U.S. market started eroding. The 2021 volume estimate for the U.S. is currently set at 185 million pounds, which is basic. It's more than last year, but it's kind of basically where it's been for the last several years. One difference, though, that they are predicting is that increase of 15 million pounds, they think is going to be heavier to early weeks. So expanding their window a little bit earlier. What they're trying to do is avoid adding volume to their peak weeks, which can already get force sloppy markets, both here and abroad. So what they're trying to do is, what they anticipate is that most of that new acreage is going to come from a new production area in the far north called Olmos, which should be 4 to 6 weeks earlier than the traditional production areas. And so they anticipate that they can increase the volume without increasing the volume in the specific peak weeks of their season. Timing will be from late May into September, with peaking in July at about 16 million pounds per week. Chile, which is, for those of you that have been involved with Index for a long time, you know that Chile had been a very large player in the U.S. market, and a significant part of what Index did as a company. It's a similar size industry to Peru. They're over 70,000 acres. What's remarkable, though, is that they've been going through a drought, and they've actually developed a very, very robust internal market, and Europe has been at a premium versus the U.S. market. So last year, believe it or not, they shipped less than 3 million pounds to the United States for the entire year. In 2021, we don't anticipate that's going to change significantly. We have in here a kind of a placeholder number at 5 million pounds, just because it's hard to estimate that it would be much lower than that. But long story short, the U.S. is no longer a destination for very much, if any, of the Chilean fruit. In fact, the situation on the production in the Chilean deal, because of the drought and their robust demand, is the fact that they actually started importing avocados around Thanksgiving. So Mexico is shipping a handful, maybe about 10 or 12 loads per week, actually to Chile right now, which, as many of you know, used to be the Thanksgiving to Super Bowl were the peak weeks of Chile's exporting. So that's been a very interesting change. They're not a net importer by any means, but they are importing avocados during what was once the peak of their export season. We can go on to the next slide. The newest player in the U.S. market is Colombia. They are up to 40,000 acres, and that is, Keith can tell you, he was the California Avocado Society rep at the World Avocado Congress last year in Colombia. All those trees are very, very, very young. they've had very limited shipments to the United States because the trees are young, so there's less fruit than that 40,000 acres might otherwise indicate. And there are still some the phytosanitary barriers to shipping to the United States are somewhat harder to comply with than for Mexico. They tend to have a smaller size curve. So if Peruvian avocados tend to be very large with 40%, 40s and larger, Colombian avocados historically have been on the smaller end with maybe 40%, 70s and smaller. So that's going to be a big difference on the little bit of fruit that does come up from Colombia. Right now, they have two seasons for the U.S. market. One is June through August, and the other one is November to January. That's because of two distinct flowerings on the tree. So they have two distinct crops. It's our firm belief that because of the altitude variances within the country, that as these new acreage come into production, that they'll be a year-round exporter. The phytosanitary requirements have been relaxed somewhat, but they're still stronger and harder to comply with than some of the other countries like Mexico and Peru. And the strong European market really limited the fruit that came in between November and January to less than a handful of containers. It is important to note here, though, that last year they shipped 5.6 million pounds to the United States, which was more than Chile shipped, just to put it into context. They're new, they're small, but they actually shipped more fruit to the United States in 2020 than Chile did. And then just to build on how young their industry is, their total exports, and this is primarily to Europe, but they grew 50% last year. And that was I think the third consecutive year that their exports had grown at 50% per annum. So that just really shows you how quickly those 40,000 acres have been planted and how quickly they're coming into production. Again, not going to be a huge player in the United States for a few more years, but we believe that we will be hearing more from Colombia in 3 to 5 years than we have in the past. And with that, I will hand the baton to Mr. Elder.
So maybe before we go into Todd's portion meeting, we can good questions that have come up. If we can address those maybe before we move on. I'll start with a question from Mr. Richard on what is the estimated California volume for June and July. And I see from the Commission and the surveys that were received, and it looks like
You're breaking up.
18%. Do I have a bad connection?
Yeah, you have a bad connection. You want me to read the questions?
Please.
Okay. One moment. Giovanni, you ready?
Shoot.
First one from Scott McIntyre. What would Jalisco do regarding possible increase in volume in the U.S.?
Great question, Scott. They have their Jalisco is they would fall into that probably 40,000 acre range. So maybe a little bit smaller than California. They might be up to as much as 50,000 acres, but they're in no stretch of the imagination another Michoacan. So at the and of course, not all of those acres are going to be certified for the United States. So my guess is that they would add probably about 5% to the gross volume available out of Mexico. One significant change though is that they would help. They would close that window a little bit from the Michoacan transition. So if Michoacan is July through June in their crop cycle, Jalisco can start about 4 weeks earlier than that for two reasons. A, it's a little bit warmer and a little bit drier, so the fruit matures a little bit earlier. The second reason is they have planted a very large percentage of what they call Mendez avocados, what in the United States is marketed as a Carmen house. And the Carmen is about 4 to 6 weeks earlier than the house and hitting that 23% maturity level. So they would add about 5% probably to Mexico's gross offerings, but the bigger difference is that they would help Mexico to be an even more of a year-round supplier, and it would lessen the impact of their quote-unquote off season during that May, June, July transition.
Next one's from Bryce Banentine. Excuse me if I'm mispronouncing names. Can you comment on the recent article in the Grove magazine regarding Article 201 fruit dumping out of Mexico?
The only comment I would have on that is the last communication I heard from the California Avocado Commission was that the board voted not to pursue that. So that's the only news I have that's come out since that publication in the Grove magazine.
This one's from Zach Rizzle. Does Mexico or any countries in South America have gem acreage?
There are test plantings of gems in both Mexico, Peru, I would assume in Chile and whatnot. We're going to get to that a little bit when Susie's going to give the presentation on gems. But again, that is one of the things that we really like about the gem is that it's a way to separate out California, because the way those protocols are written for Mexico, Peru, and Colombia are all Hass only. And so if they cannot ship, even if they were to have the gem, which they've only got test lots, there's no real significant commercial acreage in any of those countries. But even if they were to have some, they would have to go through the protocols of testing whether the gem is a variety to the quarantinary pests. And that would take a number of years. So one of the things that we're really excited about in the gem is it's a further way to distinguish California avocados from imported avocados. So if we're going Hass versus Hass versus Hass, we can call out California's attributes, but sometimes some of the people will say, well, but it's still a Hass, right? Whereas if it's gem, we can really call out, hey, this is a whole nother variety. It should be able to add to the category within your store. So just like you have 3, 4, or 5 varieties of apples on the shelves at any one time, this is a way to add shelf space for avocados with another variety. Hass is a great product, but this is something a little bit different that some of your customers might be interested too. So it's a way for California to compete in a completely different playing field, because there is not any imported fruit allowed from California, Peru, or Colombia in the gem category.
All right, we have a few more here, Giovanni. And if we're still coming in broken up, please let us know. I see some comments that some of the communication is breaking up, and I don't know if it's old comments or new comments. And Keith is logging out and logging back in to try to clean that up. From David Bouchard, what's California estimated volume in June, July window this year?
I don't believe that the California Avocado Commission is usually, oftentimes what they'll do is they'll publish a calendar of how the fruit will flow by week, and that's based off of historicals. I don't see that they've published a weekly one. They have published a monthly one, so they're showing a peak in May, June, and July at above 50 million pounds per week, which would be about maybe 13 or 14 million pounds per week. Again, those are based off historicals, which we all know that with the volatility of the last few years, that historicals sometimes are less relevant than maybe they were in the past. There were, last year I think we peaked in August, but it was only like 2 years ago that the California volume peaked in May, because the prices spiked so aggressively in May, and nobody could nobody wanted to hold the fruit at, if the price went to $1.80, that was a price that a lot of people wanted to get in on. So right now the California Avocado Commission is predicting that the peak volumes will be about 12 to 14 million pounds per week in May, June, and July, and then begin to taper really significantly in August, and even more so in September.
Okay, from John Cornell, what efforts, if any, is Index taking to differentiate California fruit from imported fruit on a retail level so the consumer is aware it's a California avocado?
Todd, am I wrong? I think you get into that, so I don't want to steal your thunder. I think you have a couple of slides that address that. Am I correct?
Yes. Yeah, don't steal my thunder.
Okay.
From Sam Grasso, Giovanni, mentioned a reduction of demand. Yet the volume for pre-Super Bowl was higher than last year. Comments?
Yeah, I've heard that. So the reduction in demand, Sam, the volume is greater. So you can say, hey, fresh avocados are selling, and the volume is up, so the demand might be up. The reason I'm arguing that the demand is not what it was is because of the price. So a year ago, we were selling pre-Super Bowl in the mid $40, in the $40 range, and by the end of February that had peaked up over $50 range. It is true, we are selling more fruit today, so technically one could say the demand didn't go down. The fact is, though, that we're selling the fruit today, we're selling 8% more fruit at basically 50% of the price. We're selling it at $23 instead of $45. So looking at it through that lens, not just the volume by itself, but the volume and the sales price. So if you're selling 8% more fruit at 50% less dollars, there's a lot less dollars being spent on avocados today than a year ago. So if you look at it through a total dollars lens, that's where I would say there's less demand.
Well, Giovanni, just a question from me. Why, if we compare the 4 weeks leading up to Super Bowl last year versus this year, my sense is that the aggregate US demand on a weekly basis has been less. But are the numbers saying it's been more? Because the numbers I'm looking at said this year's 55 million pounds, and then a week being used, and this week it's peaking at 60 million pounds. But that seemed low for a Super Bowl number for me. Am I reading that wrong?
Well, there's a couple of different sources, Todd. So there's the inbound number, the CAC reports, and that comes straight from customs. So that one captures 100% of the inbound, whether it's from California or imported. That number is up. The Avis number captures only fruit that is reported to Avis, which is not 100% of the industry. So the inbound is up. The shipment number, which is what you're saying appears to be down, that's the shipment number just from the companies that report to Avis, which for the growers, that's the Hass Avocado Board reporting system. But the Avis number does not capture all of the shipments from, all the companies down in Nogales and McAllen that are in the avocado business. So I would be interpreting the increase in volume based on the inbounds that we're seeing on that report, which is different than the outbounds that you're seeing on the other report.
No, that makes sense. So, and the inbounds are up how much year over year? 7%?
Yeah, 7 to 8.
And the pricing is half of what it was this year to last year? Or?
Yeah, más o menos. We're in the low 20s versus the low 40s.
Right. Okay. Thank you. Okay, audio is much better. Good to hear. April sent a note that weekly is posted. We will be conducting another survey this week with updated projections released end of February. I think that's the CAC estimate, right?
Yeah, thank you, April. That's very good to know. And I think we'll, for the growers, I think that what we usually do is the field guys often will kind of print out a bunch of those and carry them around in the truck and then share them on their visits. So thank you, April, for that update.
Okay, still have some more questions rolling in, or we're good to keep going?
Sure. Let's see, we're at 10:50. You want to do maybe one more and then we can, I don't know, Sophia, if we have what our time limit is on this, on the webinar, but maybe let's do one more and then we can roll into the marketing side, Doug.
Okay, and then at the end we can catch the rest of the questions.
Agreed.
All right.
I'm going to ask you to give me a softball.
Okay, for the final easy question, from Carolyn, I think it's Ajian. Are we expecting prices about 85 cents per pound to the farmer?
I think that question was for you, Todd. I would be hopeful we can get over $1, Carolyn. I think that's going to, but I'm a conservative person, so, I would, on my own, if I were farming, I would probably use your number. Hopefully that's conservative. I think it's all gonna depend on how quickly or not we can get this vaccine out and get back to some semblance of normalcy.
Okay, there's about a handful more of questions, and we'll pick those up at the end of the presentation.
Thank you. So now it's off to you.
Thank you, Giovanni. Good morning, everyone. My name's Todd Elder. I'm Vice President of Sales and Marketing for Index. I'm starting on my 26th year. Happy to be here and wanted to shine a light on how we're thinking about marketing your fruit this year. And so giving you a little background on our approach, the types of customers we sell to, and a little bit of strategy on how we're going to try to maximize grower return this year. So take it away, Sophia. So the California premium, we're always driving to separate ourselves from what Mexico is doing, and we pursue that premium based on what we believe are certain facts for California fruit when we're in season. And that is that we have the highest flavored fruit, the freshest fruit, the best appearance. It's locally grown. We're going to California brand it to separate from all the imports. And we have strong market support from both Index internally and CAC externally. The reality is there is no better fruit quality wise when California is in season. The March through August time period, I'm going to call it. So we have better shelf life, better flavor, nicer appearance, and so those are the types of discussions we have with our customers. How do we segment our customers? How do we choose who we're going to sell to? Number one, their desire to commit to California fruit. Is California an important part of their program? Are they a program-oriented account, meaning will they commit to program to California fruit for the season? We look at accounts that are in California core markets where promotion, advertising, and advantageous freight rates create added value. So, if you look Arizona West and then to the Northwest, we have distinct cost advantages versus Mexico. So we want to take advantages of those. It gives us a spread and lets us get a higher return than if we're trying to ship California into, say, Chicago, where we don't have those kinds of geographical advantages. We search out West Coast retailers willing to pay a California premium. There are certain retailers that when California is in season, that's all that they will use. And so they're willing to pay a premium to secure California fruit. We look at accounts, we call it value-added business, which primarily is bag fruit for both really club stores and conventional retailers. We saw a huge uptick since COVID has happened to us over the last year now, believe it or not, where bags are starting to sell at a higher rate in the conventional retailers. And I think that's partially due to people preferring to pick up bag product where you don't have to handle the bulk display of fruit, and it appears cleanlier. And in these COVID times, people are looking for a safe way to buy food. That's, at least that's my opinion. So that's why we're seeing bags take off a little bit. We also look at premium food service businesses that demand California fruit. So they're not all food service, but certain West Coast food service purveyors must have California fruit in season, no matter what the cost versus the imports. So we're on the hunt for those types of account. The last thing might surprise some people, particularly in a smaller California crop year, but we look for high-end retail export opportunities. So we'll be exporting fruit to Hong Kong and Japan and Taiwan this season, because we believe it will provide a higher grower return versus the domestic US market, even in a short crop year. So we will definitely continue in a limited way, but we will have an export strategy. Sophia, next slide, please. So the question came up on California branding, on how we differentiate from the imports coming in. Well, Index uses an entirely different box for our California fruit versus imports from any other country. So our import brand is Arboterra. Our California brand is Index Fresh, and it's shouted loud and proud on the box in distinctly California graphics on the carton. We also do California specific trade advertising as we're in season, and the sticker says California as well on it. In the past, we have done a dual sticker, both a California generic sticker and then a California UPC sticker as well. I'm not sure if we're going to pursue that strategy this year, but it has been done, as I think, Giovanni, as recently as a couple of years ago. But there's no doubt that with the fruits, and then the California unique bag as well. So there's California on the box, bag, and sticker. Completely different look from how we bring in fruit from Peru, Chile, Mexico, and Colombia. Organics is a growing segment of the avocado category. We do have year-round organic retail programs with most of our top-end customers. I think this is a big opportunity for California growers. It's interesting, but over the last few years, many of our customers, retail side, have insisted that if we are going to supply them with conventional fruit, we also must have the capability to supply them with organic fruit. And while the organic fruit is not a large sector compared with the conventional business for these retailers, it is a growing segment, and we do have to have organics, because if we're not having organics, you would not get the conventional business. So they kind of go hand in hand, and we're expected to have both. So we build our organic program around those mainstream retailers with organic departments. And I just mentioned the national retailers that require us to be that one-stop, one-shop supply source for them. So key for us to have that. Demand has expanded to include smaller sizes, big deal. Before, nobody wanted to use small size organics. Now we have at least two major retailers that's all they use is small size organics, size 60s and 70s, primarily in bags. 68% of California organic production is in the South. Thank you for these data points, Giovanni. This is a contrast to 63% of California's total production now flowing from the North. Organics represents 4% of Index's annual sales. In 2021, we're forecasting 50% growth, so up to 3 loads a week. And it is year-round business for us, so we'll hopefully be supported by California in season, and then when we're out of California season, it's heavy to Mexico for the balance of the year. And then just some of the key accounts on the bottom for us that are currently using organics. Sprouts is the most or the newest recent addition. So thank you, Susie, for bringing Sprouts on for us. Program business. This is really key to our strategy. It's really amounts to about 73% of Index's annual business. What does a program business or program account mean? We consider accounts that are this type of business. They request us to cover 100% of their needs year round. So we don't have the luxury to say we're out or we're short on fruit. They rely on us for 100% of their needs year round, and we must cover that business. They require us to do promotional pricing and promotional support, whether that be developing new bags for them or a new retail box or offering demos or discounted pricing when volumes are high to help move fruit. Those are all things that they're looking for Index to do. They expect us to offer a full category of products. So bags, bulk fruit in both conventional and organics, plus special packs if they require it in an RPC or a flat or a gift box. We need to be able to do all those things for them. So we want them to rely on us to cover all of their needs. And in turn, we hope to garner most of their business. So we begin the California portion of our programs when we're at critical mass and harvest. So once we start, we can't really stop with the California. So we want to make sure that as we start to transition programs from Mexico to California fruit, that we have that volume behind the initial start date so that aren't in danger of stopping and starting. So this year I put March down, but it could be mid-March, end of March, beginning of April. It's a fluid thing, and it's based on when you, the growers, see prices that look attractive to you and how soon you want to get started based on what you're seeing. So we have to be kind of nimble there as we're in the transition period. Our California programs are based on monthly volume commitments by the national retailers that assign us DCs. I put flexible pricing to mitigate market risk. What that means is we don't want to lock in pricing for long periods of time. We want to be able to mitigate the crazy volatility in the market and be as close to a competitive return on a weekly basis as we can possibly be. So we try not to get pricing 2, 3, 4, 5 weeks down the road. Now, if you're familiar with retail, most retailers do work 2 to 3 weeks out. So you are obligated in a sense to participate in those pricing models, but we try to remain as flexible as possible just to make sure we're getting the best price each week that we can. We talked about the promotional support we offer at both Index, and we try to coordinate with CAC on these types of activities for, Cinco de Mayo, Mother's Day, Memorial Day, 4th of July, Labor Day, all the key points throughout the summer. If we can piggyback our promotions on top of CAC promotions, you get double the bang for your buck, so to speak. So that's the look at the promotional piece of it. I think we talked about this point, but the last part of the key to the program account business is that they view us as California as being an integral part of the year-round supply. Super important. So there's some retailers that don't have a preference versus Mexico versus California. They can use either or. And so that's more of based on a price type decision. And so they might not best fit with the program model. We need to be an integral part of their strategy, and there are other retailers like your Costco that will use both Mexico and California at the same time, but are willing to pay a premium for the California business or fruit on the West Coast because they want their West Coast DCs and locally grown fruit. So they're sort of that hybrid where they're not shopping for price on the West Coast, they'll be shopping for price in the Midwest and the East Coast because that's a Mexican portion of the business. But they understand that due to retail desire on the West Coast to use California fruit for a lot of retailers, that kind of pushes up the California price and gets that premium that we're looking for. So there's that component. So anyway, the point is that the accounts that we're trying to approach, and we have a lot of them, they consider California, they need that in their program and they're willing to pay for that. I think next slide, Sophia. It's just a snapshot of our current breakdown on customer base by percent. The largest portion is retail, 68%. The interesting thing to note on this chart is food services at 9%, which is almost half of what it was the year before. And that speaks directly to the pandemic, the restaurant closures, and the reduced demand from that sector. So that sector was down, but our retail sector was up 6%, and our wholesale was up a couple of percent. So really the loss in food service was recaptured in retail and wholesale. So just interesting to see. And we are expecting food service to rebound this year, knock on wood, but it'll probably be back up around 15% or so by the end of the year. Next one. This is our customer top accounts by size, I'll call this. Just wanted to share who some of the major companies we're working with, and to break it down by size for you so when we make our marketing plans, it's not only based on, wanting to sell Costco because they're a big customer and they move lots of volume and everybody would like them on their list. It's we approach it size by size, and based on our seasonal forecast of volume by both, by country of origin, and then we extrapolate that out into, well, how many boxes a week does that mean Index has to sell by size, by country of origin? And we look at our current customer base, we forecast their weekly needs versus what's coming in, and then we see if we have a surplus or a shortage, and then we go out and build strategies on how to either sell the surplus or cover the shortage. So it's definitely broken down to use, our plan's broken down to use every size on the tree. The export business that we will definitely do this year, it's a 52-week-a-year business for us. We've been doing it consistently for at least the last 10 years and probably more like 15. It's primarily to Asia and Canada. So we ship regularly to Taiwan, Hong Kong, Japan, and Canada. Just a note that freight rates to Europe they preclude California fruit in most seasons from getting over to that marketplace. So we're at a bit of a geographical disadvantage versus most everybody else. The freight rates are super high. Exports are 4% of our total business. We avoid trading companies or brokers. We do work directly with retailers in each of the countries that we export to. And we refund the HAB rebate for all fruit that we export from California. Breakdown is self-explanatory. Probably the biggest change this year is Canada. Last year was 10%. This year it's up to 17%. So that's a growing sector for us. The rest, I'm going to say, are flat from this year to last year. And the gems, Susie's going to tell us about gems, but did we want to, Keith, Giovanni, at this point, take any questions on the marketing portion, or did you want to capture those at the end as well? You're on mute.
I think I hopefully have a little better connection now, Todd. The couple questions that came in on the Q&A option that I noticed from Henry Dominguez. What is the actual price difference between California and Mexico? And does the grower get 100% of that premium? Giovanni, maybe you can help answer that question. The average price difference that I typically see during the California season is anywhere, hangs around $4 to $10. And absolutely, the grower gets 100% of that premium. You have anything to expand on that, Giovanni?
Yeah, I think that's a good opportunity, Keith, to really expand on one of the things that makes Index unique versus basically every other handler in the industry. So with everybody else, as far as I know, they're working off of a fixed bid to the grower, right? So there's a defined payment to the grower. With Index, we work off a different model going back to kind of our co-op roots. We have always worked off of a defined packing charge, what we used to call a retain, so we have a defined packing charge, and we don't take out more than that when paying the grower. So If the fruit sells at $25, we take out the packing charge and all the money flows back to the grower. If the fruit sells at $55, we take out the same packing charge and everything else reverts back to the grower. So I think that's a good opportunity just to share one of the distinguishing factors that we believe is a competitive advantage historically that Index has offered in working off of a defined packing charge rather than a defined quote.
One other question on exports. Is there any opportunity going to Asia this year as they are opening up their economy or opening up their markets sooner than the United States is?
Say that again? Is there any opportunity to ship to Asia?
Yeah, as they're opening up sooner than the United States. I'm not aware of that, but do you have any insight on that, Todd?
Well, we're shipping to Asia now. And so yes, there's the transition from Mexico to California for our Japan, Taiwan, and Hong Kong markets is probably going to happen in mid-April. Is it going to happen sooner than that? Probably not, because of two factors, critical mass and price difference between Mexico and California.
Thank you, Todd. And I think that's got us caught up with most of the questions. So if we want to bring back up the presentation, Sophia, and I would like to introduce you to Susie Rea, and she can walk through the GEM portion of our meeting.
Okay, hello everybody. I could go on video for this, but I'm afraid it's going to delay might delay here. I'll try it. Here we go. So because this is my first season with Index Fresh representing the GEM program, I'll rely a little bit on the history and the previous experience that we had the prior seasons from Todd. Todd will be able to help out a little bit, and Giovanni and Sophia. So very exciting to bring something new to the table. Right now, I think more than ever, we're looking at somewhat of a saturated market. And I think GEM, it's perfect timing here to be able to offer something new to some of our newer partners in the retail space, right? That lets them bring something new to their consumer, to their shopper. There you go. So Sophia did a really great job on designing this header on this bag, which I feel really makes it stand out. Again, shows something different, a different offering for a retailer. And I think that based off of, to piggyback on a little bit of what Keith had said, and Todd, we did see an increase in the bag consumption with the overall, with what had happened with COVID. So I think that having a GEM offering in a bag also will contribute to some of its success in this upcoming season, as we see that category, the bag category, growing. The new acreage that's coming on, I think what's going to be key for these retailers is consistency in our offerings, right? We've got a pretty extensive retail space. I think we're covering everything from a 32 count to 70 count based off of what a retailer is, typically pulling from us. So I think we've got a great opportunity here to be able to bring a different offering to each individual partner of ours without having them competing against each other, right? As their packs may vary throughout the retail shelf. I think that based off of what we're hearing you know, this year and then what we've experienced, you know, how do we retailers are excited this year, right? Because they've been able to go consistency after aggressive ads, right? So as they're placing their schematics and as, excuse me, 1 second, I'm sorry.
Sounds like Susie had an unruly coworker.
So sorry about that. I've got a gem fan already in the making here. So, so I think it's going to come down to consistency, right, on the offerings. If we've got a consistent offering, as we know, like a retailer, they've got to plan the space ahead of time. But I think what the bag brings to it is offering that additional educational piece on there, right? If we know that, you know, the gem variety is firm to touch, but maybe ripe inside, right? Offering that extra educational piece to the consumer, I believe from experience on the retail space, I believe that's going to be key. It's going to be that additional support to help a retailer be able to promote an item and have it stand out. You are going to want to have both. Obviously, you're going to want to have the loose fruit on the shelf, but as far as really highlighting, you know, the gems features, characteristics, flavor profile, I think by offering it in a bag, it will maybe, you know, be able to give this retailer that extra little bit of push that it needs to be able to really highlight and move this forward. Again, so Todd, I think that right now you could probably talk a little bit on just the past experience that we've had and some of the feedback that we've been getting from the retailer thus far, and then leading into this new season, what we can kind of tweak and, you know, based off of the feedback that we've been given from retailers, how do we go after, you know, and support their programs a little bit better as our acreage increases on this variety.
Sure. So I like Susie and everyone, I like to consider that just based on their last 2 or 3 years of experience, that we've seen there's 3 types of retail strategies that people are using for the gems. There's the conventional retailer that's using it as a category extension. So they're going to carry the Hass variety, and they're going to carry the gem variety to try to expand the category and have different offerings. And how are they going to do that? Those retailers are focused on either using the gem in a jumbo premium type of position, so your size 36s and larger, and then they'll carry a small Hass, say 48 or a 60, and with the hopes of not cannibalizing on their Hass business and actually gaining incremental business by offering the large jumbo piece of fruit. So that's one. The other way the conventional retailer might look at doing this, and I say might because we haven't seen a lot of activity in this area yet, is by using the gem size 40 or 48 in a bag offerings, so that they can differentiate against versus the Hass, still carry the Hass, but have the gem in the bag with the educational messaging to the consumer, telling them why this is an attractive variety, how it ripens, what are its major attributes. And again, that would, for me, that would be a category extender so that they could use both Hass and gems and garner incremental sales. So all good stuff as far as growing category. The second kind of retailer is, I call them independent high-end retailers. Those might be your Gelsons or Bristol Farms of the world that, again, they're gravitating towards the larger pieces of fruit, the size 36s and larger, and they want that premium high-end piece of fruit on their shelves. That for that type of retailer, that might be a Hass replacement strategy because they carry large size Hass as well. So last year, a couple of the accounts that we worked with, I'm thinking primarily it was in the Northwest, Town and Country and Yoke supermarkets, that during the gem season, they didn't carry large Hass. They substituted with the gems. The third type of option that retailers have is, I call it Hass replacement. So if they're going to carry a gem size 40 or 48, and they already carry a Hass size 40 or 48, they might be willing to substitute. And we didn't see it last year, but because of primarily of COVID and reduced retail SKUs and retailers' unwillingness to commit to new varieties. But the year before we saw it, they would take a certain sector of their stores and use gems in place of Hass on the size 40s and 48s. So that's, and you know, most likely we will see that strategy play out this year with some of them, just because the overall crop is down 25%. So it's going to give a natural foothold to people that want to use California fruit but aren't able to get enough of the size 40s or 48s. So just 3 different ways we're looking at it on how to market gems to retailers, one, the ultimate goal would be to expand the category and to have them use both Hass and gems, but we understand that that might not be possible for everyone, considering the sizes they're using.
Yeah, I think in addition to that, Todd, too, we're also seeing an increase, the home delivery service, right? And this is a great opportunity to be able to market something like a gem, on the West Coast, in this home delivery. I know we're talking about with COVID maybe subsiding a little bit, and with the vaccination and everything coming out, that we'll see that service has grown throughout this year, the home delivery. We'll see if that's sustainable. But this is another, something where maybe a home delivery service would have something different, right? An exclusive offer to be able to give to their customer. And then it just improves that customer experience and brings something different to the table. I think it's too soon to tell. Right after Super Bowl here, it'll be a great time to be able to reach out to retailers and promote this and get ahead of it now that Super Bowl's out of the way. And it definitely brings something different to the table. And I think that will create some excitement around this item. And again, it's the consistency. It's, a retailer's concern is if they go out on ad or do promote this, is there the volume there to support that, right? So it'll be really key to communicate on the offerings that are available and stay as close. Obviously, these are estimates and nobody really knows, but to be able to offer them something and really execute on it, right? So, but for the most part, that's what I have. I mean, again, this will be my first experience with gems this year, but I'm very excited at the opportunity that this presents to be able to go after both our current business, to be able to add a new line item, and then also as a door opener. I think it really sets us apart when we come up with bags like this and different marketing ideas to promote this type of variety. Again, as much as we're in competition with all of the new suppliers and growers that are coming to the market, and retail is just as competitive, right? You go, especially in California, within a 2-mile stretch, you've got 8 different retailers, right? How do they stand apart? So this is just another piece, another tool to be able to improve their customers' experience, and offer something different. So I'm very excited about, bringing this out to market more, developing it more in the market, I should say, because I think Index has done a good job introducing it to the retailers that they do have on board. And I think it'll just extend our reach out there and gain a little bit more of the share on the retail side of things.
And it's just a snapshot of retailers that have participated in the program over the last 2 years. This is a new idea that it's brand new, actually, about 3 or 4 months. We're looking at ways to market directly to the consumer through the gift box that you see on the screen. It started as an idea of just to see if we actually could execute from an operational standpoint of, can we get it packed in the box? Can we get the website up and running? Can we distribute it in a timely manner with good quality fruit directly to the end user? And the answer to all those questions is yes, we can do that. It's in the developmental stage now, so we know we can do it. Now it's how to, from the online part of the business, it's how are we going to develop this program to get the word out and to grow the business and to make it commercially viable. So it's exciting for us. It's a work in progress, but something that we're looking at and think in a long term it might have some good legs to it as another way of selling fruit, particularly California fruit in season, locally grown directly to, from grove to consumer. Who doesn't like that? Additionally, we're going to use the site, we think, to develop our regional ripening businesses in both California and Texas. So you'll see small batch orders for restaurants and for convenience stores. And we mentioned the online ordering for home delivery. So we're going to use the site as a hub to grow our regional ripening businesses, turn our warehouses into, I call them feeder stations of ripe fruit for the small mom and pop restaurants, the small retailers, 2 to 5 store chains, things like that. 2 to 5 million people live within a 30-mile radius of the Bloomington packing house. So we have a large audience for this business, and we've never approached them before. So since we already have all the infrastructure in place and we know how to ripen and fruit, we think this may be an additional avenue for us in the future. Benefits for the end user are fresher fruit, personalized service, getting it from an avocado expert, our state-of-the-art ripening done locally. We think it plays well for this regional type of development. And on the online sector, it's really easy to do, and the deliveries come. I think, Giovanni, you tested it out. It came within 24 hours, maybe 48 hours. I encourage everybody to go online and order a box and see how it looks.
Yeah, just as a testimonial, I can offer an enthusiastic endorsement. I tried this for the first time last week, about about 1 o'clock or 2 o'clock in the afternoon. I put an order in. It was easy to use, easy to navigate on the website. And the next day at lunch, so less than 24 hours, my doorbell rang and the fruit was at the door and in perfect condition. So that was such a success that then we went ahead and sent out about a dozen. We put in about a dozen orders the night before last, and they were all delivered yesterday. So two very, very positive experiences from myself. Giuseppe, I think you're just starting the process right now, based on our conversation from this morning. But it was pretty exciting.
Congratulations to Sophia and the sales team on getting that project up and running. One question from the group on, is there a way that a grower could help fulfill those orders? We looked at that closely because there are some growers that are participating in some of these ventures on their own, farm to market or farm to door. But we saw an opportunity for the direct retail, as well as expanding it, as Todd mentioned, to some of the mom and pop stores. So the growers' fruit will make it into that program. If technology was advanced in the future to do it directly at the farm, that's something that would be addressed down the road. But the California grower fruit definitely will make it into that program during our season. Do we want to finish up with the next slide? I think we start talking into some of the opportunities.
Sure, I can pick the baton back up. Sophia, if we want to go to I think we're getting close to the end. If we can go on to the next slide. This is just some of the recommendations that we talk about every year. Our MO at Index and our firm belief is that the fruit belongs to the farmer. You're the one taking the risk on it with the water, taking the risk with the weather, taking the risk with the market. We're never going to come to you and say you have to pick now, and it's always the grower's decision. With that, Keith and his team, Giuseppe, Mauricio, Bailey, Jose, are always going to be sharing with you opportunities in the market and sharing with you trends in the market, and might have some recommendations on when might be a better time than others based on market conditions and based on growth conditions. But it's our firm belief that there's always a grower's decision on when to bring the fruit to market. With that said, planning is always of the essence. So during Todd's presentation, he talked a little bit about the planning process that we go through. With the customers, we put the fruit on we do projections based on the seasonality. Then we bring that down to projections based on a month. And then we do a weekly call with the field team and the sales team together, where we go through 4-week projections, week by week, size by size, grade by grade, and where that fruit is going to go. The better that those projections are, the better we're going to be able to plan and perform. And so that's where the communication between the farmer and the field team is so vitally important. So the more communication that we can have on planning, the better we can do on a number of fronts. Marketing is one, and the other one is tying up labor. That as labor is become a little tighter in the last couple of years, specifically in the South and specifically during the peak harvest periods. The more we can plan that ahead of time and not making last minute decisions, the better we are going to perform. Again, we're not expecting critical mass before March. And the performance of the season in my mind is going to depend on three things I touched on earlier. It's going to be how quickly the economy gets back on its feet, how quickly the vaccine distribution gets out, and more people each week hopefully can go back to more of a normal lifestyle. And then the third one, which we should get insight into before the end of the month, is just how much fruit is left in Mexico, and those first two factors are the demand side of the equation. Then this last factor is how will this supply side of the equation evolve over the next few weeks. And we'll through Keith and his team will be as soon as we have the information. That's one of the real services that we offer is getting that out to the growers and sharing as much as we can about what's going on in the market as possible. So that brings us to the next slide. Again, key success factors. We cannot emphasize the importance of quality, consistency of supply to cover programs. We've talked about that, having wanting to transition key national accounts one time from imports into California, and then having the critical mass to sustain that transition for the following 20, 30, 35 weeks, however long. Hopefully we can extend it longer than we're projecting right now. Schedule labor early. We talked a little bit about that. Managing the transition periods, which is what we're in right now. Again, trying to bring it in and critical mass and not small lots that are going to be less viable to putting together the critical mass needed to break into those blue chip accounts that are so critical to our success at maximizing grower returns. We want to maximize size, and again, please communicate harvest plans early. The better information that we can get for those 4-week projections, that it's impossible to emphasize just how important those are. If we end up coming in 10 or 15% short, or 20 or 30% over the projections, we deal with it and we can be nimble, but the more accurate those projections are, the better we're all going to perform for each other, I believe. Let's see. So I wanted to share here a little bit some of the programs that we have that we believe are unique to what we offer to the industry. So we do have a volume rebate program starting out at 250,000 pounds. We offer a gap rebate for growers that get the GFSI audit done, and the field team has the details on that to help subsidize the cost of the audit and say thank you to the growers for helping us with that. We have personalized assistance in doing that through our food safety coordinator, Lisa Strickland, who's got those of you that have worked with her, we've heard nothing but rave reviews about the assistance that she gives in achieving the compliance for the GFSI gap audit. We're going to be continuing the seminar series and the agronomists, bringing up Gerardo next month to work with the growers that work with Index year in and year out. And both of those are really designed on Index's real belief in the core importance that California is to our offerings, and that maximizing per acre productivity is key to keeping California sustainable and viable for the long term. So that's the whole goal in these cultural seminars that we've been doing now. I believe we're celebrating our 10th anniversary, which we're very, very proud of, and bringing up Gerardo Aldunate on the seminars, because we do believe that there's a very bright future for avocados in California, but that the brightness of that future is really contingent on our ability to increase per acre productivity. And Index really makes I don't know of anybody else in the industry that's made the commitment that Index has in trying to share with growers the tools that we can come across to help achieve that. In addition to that, we have hauling credits, and of course the Fresh Facts that's available via email, the website, and our telephone app. Our philosophy is for transparency. That's why we have the whole field team out there sharing information as throughout the season, paying to the market, financial strength. We have a very strong credit rating in the Blue Book, and we've been around, like I said, since 1914, and so that commitment has not changed. And our California focus. So the California focus is from the cultural seminars and agronomist outreach that we have. Jose, you just finished up not too long ago, helping with the leaf samples and water samples with the growers. We've got field reps working year round throughout the state, from Escondido all the way up to northern San Luis County, and to a lesser extent all the way up into Monterey County. We're the only handler doing a specific California centric box. We're emphasizing part of the gym push that we're really doing is emphasizing a unique product that's only available from California. So those are really the things that drive us as a team. And that brings us to the end of the presentation. Keith, are there a few more questions?
We're almost at the hour 45 mark, so let me look through the last chat questions and see if there's some questions that we missed. Couple comments on bagged fruit is a wonderful option for grocery consumers. That is a very good point, especially during these times. I think there's a lot more. We touched about that several times on increased consumption because of bag options. A question from Mr. Rissel on what is the prospect of being able to sell fruit to mainland China, and is India growing in size as an export market? Is there any other updates, Giovanni or Todd, that you know of about access into China, and any updates on India?
I am not aware of any. Last I remember, I think it was, so we do send some fruit to Hong Kong, but I don't think we're not sending any fruit at the moment into China. And I can't remember what the latest was from CAC on access into China. What we are monitoring, though, is that, there was great and tremendous promise of growth in China about 4 to 5 years ago. But over the last 18 months, first naturally and then accelerated by COVID, that excitement in the growth year on year of avocado sales in China is really stagnated. And we're hearing that both out of Mexico, Chile, and Peru. All three of them have reported lesser sales over the last 18 months to China than what had been, in the previous 3 to 4 years, pretty consistent and growth at a very interesting rate. That is slowed down or receded.
Was the China imports about 100 containers a week?
I think it was headed there. I don't know that it ever consistently broke that number. I think it was about, last I heard, it was a little more than half that, Todd, on a consistent basis, and then maybe receded a little bit from there.
Yeah, we sold into China, I think in 2016, just to get a feel for what it was like to market fruit over there. And at that time, the cold chain is really poor in China, right? So they don't have good storage facilities. They market fruit out of the back of trucks at most of the wholesale markets. It's really interesting how they do that, and it's a particularly volatile market unless you have a really sound customer to go to. So I still think it's a potential huge growth area, but I don't want to be the guy on the front end of it trying to grow it. Once they figure out all the kinks, I wouldn't mind coming in and participating in it. But as you said, people are stepping back from it now. And I know that our friends in Chile and Mexico that we've talked to have both shied away from it just because it's been so difficult to make any margin over there. And usually they have a ton of quality issues because the Chinese market expects a perfect piece of green fruit. If you have one spot on your avocado, this is my prior experience, they will file a claim against you. And they will circle that one black spot on that one piece of fruit in that one box and try to claim you on it. So it's an educational process for sure.
Yeah, and I think that you can't overemphasize that lack of refrigeration infrastructure. The Wall Street Journal did a story a couple of years ago, and that they have about 10% as much refrigeration as we do. So they're feeding 3.5 times more people in the United States with 10% the refrigeration. That's just an amazing comment on how much fresh food they have to be moving through the entire system every single day to be able to do that. To address the part on India, India is another promising market. If 10% of 1 billion people are in the upper end that would be interesting to sell avocados to, that's a huge market, 100 million people. One of the challenges on India is that it's so far away from the Americas that you're talking about maybe a 3.5 or 4 week ride, and that's pretty hard on avocado. So right now it's very risky to get into India. A lot of the countries have gained access, but I wouldn't say that anybody has significant shipments there.
I think we've covered most of the recent questions. If I missed any and we didn't bring them up during this meeting, we will send you a direct message maybe after I review these on the list to answer any questions we didn't get to. So with that, I appreciate the attendees' time and for joining our meeting, and like to thank Giovanni, Todd, and Susie for your presentations, and look forward to a upcoming California season. Thank you, everybody.
Thank you.